It's about that time of day again. My name is Joseph. Tuesday evening, May 15th. Welcome back to your nightly newsletter. My plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's session. And I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening with crude oil, oil is range bound with a big triangle pattern this evening, and that tells me to focus on fading those breakouts with failure patterns tomorrow morning. The S&P is bearish with a big spike in channel pattern tonight, but the real clue are the shallow lower lows I'm seeing on the chart. That tells me to avoid those common traps at new lows tomorrow and focus on selling as high as possible up in the battle zone. Nasdaq is also bearish with its own spike in channel pattern, telling me to focus on buyer failures for selling opportunities up above the channel high tomorrow morning. Gold is bearish with a big spike in channel pattern as price collapsed lower today. That tells me to look for selling opportunities with buyer failures on the next pullback. But I got to be honest, I can't help but notice the long-term triangle pattern on gold telling me to keep my eye out for a potential big reversal going higher tomorrow morning. The euro is bearish as well with a big spike in range pattern. That tells me to focus on failures for selling opportunities up above the high of that range tomorrow morning. Boy, oh boy, we saw some strong moves on the chart this morning, didn't we? Which usually results in trading ranges the following day. So the plan is to stay patient, keep those eyes open, and fade those counter trend breakouts tomorrow morning. And as always, I've got a great newsletter in store for you guys and gals tonight. We get a ton of learning and earning opportunities tonight. I'm going to break it all down in just a few moments. Before we open those charts and put the plan together, though, I want to remind you, if you're on YouTube tonight, you can find a detailed description of the entire strategy written out on my blog here at Sideways Markets. I'll also post a link in the description of that YouTube video for you. If you have any questions about anything covered in tonight's video, please remember to post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And if you really want to stay in tune with everything going on here at School of Trade, head over here to sidewaysmarkets.com. This is where all the action happens every day, and make sure you join our mailing list. Give me your name and your email address, and I'll shoot you an email anytime I publish new material here on the blog. While you're here, don't forget, if you're on social media, I'm posting all the time throughout the week. Charts, links, updates, videos, quotes, all kinds of good stuff you guys will find value in. If you're on social, follow me in the lower left-hand corner for updates throughout the week. And how about some charts for tonight? Yeah, that's easy. All the charts from tonight's video, you can have them on your computer, ready for tomorrow, right where it says click here to download today's charts, grab those charts, and be ready for tomorrow's session. And speaking of tomorrow's session, grab that free pass. What are you waiting for? Grab that free pass. Come join me tomorrow morning as a guest in our trade room. Grab that free pass in the upper right-hand corner, and I'll give you guys more details on how to attend. Don't forget, any questions, post those questions in the comment section below or hit me up on live support on the right-hand side of our website. Got a lot to cover here tonight. Hope you guys had a great Tuesday here so far. Had a great Tuesday session, but as I always remind you, we're only as good as our next trading day. Let's get ready for it. Tomorrow's Wednesday, May the 16th is a hump day here, middle of the week, third week of the month of May, right? So as we start getting later in the week, we do expect to see an increase in volatility as options start to expire right across different asset classes. Most important thing for tomorrow, we've got our housing starts number at 8:30. We have industrial production at 9:15. And for all you oil traders out there, we have the weekly inventory report at 10:30 Eastern time. Housing starts definitely going to be a red star news event for tomorrow. So we'll look for that to get things moving nice and early. Industrial production should fill that gap between 9 o'clock and 9:30. And then, of course, don't forget, if you're trading on oil, 10:30 Eastern time tomorrow morning. My cutoff on Wednesdays for oil trading is 10 a.m. Eastern time. You can push it as far as about 10:15, but typically, though, after 10 a.m., things start getting really, really slow and sluggish. I'll wait until after about 10:40, 10:45 to then try to go in back into that market. But typically, though, on Wednesday mornings, crude is pretty much a half day for professional traders. I realize a lot of you like to gamble with that news report. But I'm never a big advocate for trading during news, and the inventory report is definitely one of those news events that you really don't want to mess with. Lots of opportunities each week to trade crude oil. We don't need to go wasting our hard-earned capital by trying to gamble on the news. So get to it early tomorrow. That's definitely going to be the best advice I can give you. 8:30, 9:15, and 10:30 tomorrow. We've got a great little peppering of news tomorrow. That should keep us busy most of tomorrow's session. Let's jump into our charts here tonight. I'm going to go crude oil, S&P, Nasdaq, gold, and we'll wrap up on the euro. Starting off tonight with the black gold, the Texas T, crude oil futures, range bound, ahead of tomorrow's weekly inventory report, telling me to fade the breakouts, buy low, sell high, and avoid the middle tomorrow morning. And with the major news at 10:30 a.m. tomorrow, my goal is to get to the desk early, find those trades early, preferably before 10 a.m. for the most reliable trading opportunities. As we look at this chart, it helps to zoom out a little bit. If I zoom out a little bit further, you can see this is not just a triangle, This range could literally be extended all the way back to, the 9th of May, So you can see this range here is quite bigger, than just what meets the eye at first. I've got a trend line coming down overhead, trend line coming up below and up below, We can see we are right smack in the middle of that trading range. Now, the good news is we should be able to get outside of this range here, May require a little bit of patience, but we should be able to get outside this range sooner than later. My goal on this is to use range rotation. So we should be coming off the high, down to that low. We should be trying to go back up to retest that high. So tomorrow morning, I'm looking for what I call the 2-try rule, so I can focus on failures and fade, these breakouts. So as I zoom in on this, what you basically want to be looking for when it comes to a range-bound market is stay away from the middle. You've got falling resistance, you've got rising support, Don't try to mess with the middle here. This can get really, really nasty. And really your focus is on getting price up, letting buyers try to buy the pullback. When they fail, sell it back in. Get price down, let those sellers try to sell the retracement, and then get this sucker back in. You can see kind of a good example of this, We go up, buyers buy the pullback, they fail, we go back in. Price goes down, sellers try to sell the retracement, they fail, and we go back in. To get a little bit more detailed on this, a lot of times what it looks like is one move, 2 moves. We then see sellers now, thinking this market is a bear market. What happens? Bears try to sell that next pullback. They fail. Stops get run. Price rockets higher. Moving average now comes over, and we can buy that pullback. So what I like to do is I like to look for what I call the 2-try rule. If I can draw this damn thing on the chart there, 1 try. 2 try, That tells me we've got some sellers, They got the hook right in their gills, We got them where we want them. At that point now, the bears come in and they try to sell that pullback, They're convinced this breakout is going to hold. But where are their stops? Their stops are hanging out right above that high, So we start looking for buying opportunities right above that area, That is what I call a seller failure with the 2-try rule. Now, once sellers fail, what's going to happen? You've got buyers buying the low, but now you've got sellers who now become buyers, because how do you get out of a bear market or a short position? You buy your way out, Only way to get out of a short trade is to buy your way out. So, of course, markets usually jump, back into that range. Look what happens here, Look what happens right there when sellers realize they're wrong, Price jumps. Well, then what happens, Nobody wants to buy in the middle, so what do? They wait to buy low, They wait to buy a pullback, So we get that 1 try, 2 try, failure, boom, back up, pull back, and go back in. You can see that pattern earlier on in today's session. So the plan for tomorrow, this of course being at the low of that range, I'm looking for that 2-try rule, I want to see him try twice. What that does is that gives the rookies, the retail traders, the people who don't watch this newsletter, it gets them thinking this market's breaking out. And that breakout, once it fails, and most of them do, ends up shooting back into that trading range. 2-try rule, seller failures, buyer strength into buyer pullback. Now, I'm covering a lot of terminology here tonight, and I want to make sure you really can use all of this to earn some profit tomorrow, right? My goal tonight is to give you a few more tools for your toolbox. And if you'd like, I have a free trading class in the upper right-hand corner of this website. Pause the video, grab that free trading class if you haven't done so already, and learn all the different patterns that I use. Hopefully, you can use that in your own trading, right? And if you want to, come out and join me tomorrow morning, and we'll trade the patterns together in our trade room. But whatever the situation is, if you're here for the first time today, or if you haven't grabbed that free trading class yet, grab that trading class in the upper right-hand corner. I'll be waiting when you come back, right? And then that way, I'll give you a much deeper dive into all the patterns we use and all the technical analysis tools that we use as well. All right, now, that's at the edges. Another thing I'm watching here for tomorrow is going to be, again, we talked about this, right? 1 try, 2 try, back up in, right? 1 try, 2 try, failure, strength, pull back down, right? Failure, strength, pull back down. Okay, that's the top of the range. But let's be honest, we got a rising support trend line, a falling resistance trend line. This could easily turn into its own range tomorrow morning. Absolutely it could. So what if we start seeing this? What if we start seeing double tops, double bottoms inside of that range? Well, you know, once we have a double top and a double bottom, now we have a new range inside of a range now. So now we don't have to worry about getting out to the edges of the big range. That would be ideal, but we will be okay now with 1 try, 2 try, failure back in, right? 1 try, 2 try, failure back in, right? So if we start seeing a range inside of that range tomorrow, right? Watch those traps, watch those failures, right? Get it up and back down, get it down and back up. Watch those swings, right? Watch those swings. It'd be very, very important levels of support and resistance. 1 try, 2 try, failure back up. 1 try, 2 try, failure back down. Again, get to it early tomorrow and try, I know it's difficult, try to stay out of that middle. In my experience, and I've taught a lot of people how to do this over the years, the hardest part is always if we don't see the pattern and prices in the middle, stay away, stay away. I know it's not fun to wait and sit on hands, but it is part of the process. I also want to give you guys a heads up too. It is about that time of the month. We usually see right around the 18th of every month. We usually start seeing signs of rollover. As of right now, we are definitely still trading that 618 contract. I've got 700, just shy of 800,000 contracts on the 618 contract. The 718 contract is starting to pick up some volume here right now, and once the volume total on the 718 is greater than the 618, then we'll move over to the new contract, the 718, right? So rollover reminder, doesn't look like it'll be tomorrow. It looks like it will probably be Thursday or Friday, but just in case I forget to tell you later on this week, right, keep that on your radar. And again, as always, right, you can come out and join me tomorrow morning in our trade room, and we'll make sure we do all that correctly every day anyways. All right, moving forward here, we got a lot to cover here tonight. How about some S&P now? Yeah, S&P is bearish with a big spike in channel pattern after a massive collapse off yesterday's high. This strong move lower puts the momentum back in the hands of the bears. But look closely, and you can see each new lower low keeps getting kicked back against it, signaling that sellers are quickly losing momentum. That tells me to stay patient and focus on selling high tomorrow rather than trying to sell new breaks to the downside. So we look at this chart right now, it's relatively easy to see, right? Big collapse off yesterday's high. We see a strong move down, but look what's happening. Every time we go up, what happens? Sellers come in, right, and they sell back down. They kick back off the lows, back up, sell back down. New lower low, kick back up again, right? Sell back down. New lower low, kick back up again, right? So the last thing I want to do tomorrow is try to sell those new lower lows, right? This is why we always say don't trade breakouts, because breakouts, you're selling low, you're buying high, right? Focus your energy on selling at levels of resistance. So we know the market's bearish. Where are my best levels of resistance? First, up at the top of that channel. That's an easy one. Second, right, we get all these prior swings. Those are easy. And then the granddaddy of all the levels of resistance, a prior support level, which can be used as resistance around 16 3/4 here for tomorrow. Most important thing to keep in mind is whenever we have a spike and channel pattern, this is pattern is, right? And again, take that free trading class in the upper right-hand corner. You'll see a lot of examples on spike and channel patterns in that free trading class. Trust me, you'll be a master of these spike and channels before too long. Every time price goes up, we keep getting it sold right back down again. So I'm going to keep on following that plan here for tomorrow. Sell at resistance. Most of the time, the best pattern you're going to see on a spike and channel will look like this. It'll be a strong move up. It'll be so strong that it will make you feel like there's no way this thing's coming back down again. But sure enough, moving average comes over. The buyers, they gear up, they buy the pullback to the moving average, but they struggle to push to new highs. Then sure enough, what happens is we then start seeing that next pullback, right? The next pullback, buyers try it again, but this time, right, they fail. And that failure leads to those buyers getting run out of their positions, right? What happens when you get stopped out of a long position? You become a seller. Right? Combine that with sellers already selling off the high. You've got sellers selling and you've got buyers now selling. That produces a strong move down. What happens next? Drags that moving average over. And what do? We wait for that pullback, right? And we sell off that moving average. This is a very similar pattern to we talked about before on crude oil, right? To try. And usually when it comes to a spike and channel pattern, the move up into that battle zone is usually really scary. It's usually really, really strong, because the reason why it moves higher is because sellers stop selling because they're seeing it kick back again, right, every time they go lower. So that goes higher, but there are sellers usually waiting up here to send this market right back down to retest that high. So I always wait for those buyers to fail. That buyer failure leads into seller strength back down to retest that low. Another scenario we see from time to time in a spike and channel pattern is if you put a midline on this channel. This is relatively not as common as the first example. If you put a midline on this channel, you'll notice it acts as support and resistance. Sometimes we'll see a market that just for whatever reason, it gets kind of pinned down at the lower half of that channel, and it ultimately creates a spike and channel pattern kind of inside of a spike and channel pattern. In that sense, right, in that case, we're going to use the top of that channel as major resistance, and we'll look for selling patterns similar to what I described earlier, right, up around the highs of that channel. What if it keeps going lower though, right? What if it keeps going lower tomorrow? You know, we're expecting it to go up and then back down again. What if it keeps going lower? If it keeps going lower, look for bears to hold a pullback below the low of that channel. And because this market will have to be really strong to do that, that usually turns into, you guessed it, another spike and channel pattern. You'll be amazed how many times you see a spike and channel break free into another spike and channel because, hey, shocker, right? It's a strong trend. So in that situation, we're looking for selling opportunities up at levels of resistance so we can bring the sucker back down to that measured move target at 26.87, right? And we'll say 26.87.5 there just to be certain. Okay, now on top of that, I can also see potential here for a double bottom, right? At the same time, a possible double top. If we do end up getting double bottoms and double tops, if we do see this market float back down to that low, then you know we have a trading range. We're looking for one try, two try, failure, back in, or like I mentioned earlier, strength, pullback, strength, hold the underbelly of that channel, and then we know we're free to keep trading down, right, to that measured move. Last question. How do we turn bullish? How do we turn bullish? Strong move up. That's the first step. Then the next step is the buyers have to prove to me that they really want this control. They've got to hold and run. We've got to see a real strong move going higher. That's the only way you're going to have confidence to buy that pullback or to start being a buyer, because look what happened here, right? Strong move up here. What happened there? Yeah, sunk right back down in. Right here, look at that strong move up. Sunk right? You can easily see that a strong move against the trend is definitely not enough to give us, right, the confidence and really the reliability that we need. So watch for that strong move up, pull back into strength, second leg going higher. Then don't chase after that move going higher, right? Grab that high, find a hidden channel, right? Hidden channel, and we'll look for that pullback to be a buyer off the low of that hidden channel. Spiking channels, hidden channels, narrow channels, wide channels. I go over all the different variations of these channels inside of that free trading class. It will not waste your time. Grab it in the upper right-hand corner, pause the video, grab that class, right, and I'll see you on the inside. Next up here, over to the Nasdaq. Nasdaq is bearish with its own spike and channel pattern as the bears sit on that prior month high support level this evening. This spike and channel pattern tells me that sellers have definite control, but the velocity of this move is clearly slowing down, most likely because sellers aren't interested in selling this low anymore. So my plan for tomorrow is to focus on selling with buyer failures up at that battle zone, up at levels of resistance, rather than trying to sell to new lower lows here tomorrow. Now, this is a market that you could either call a spike in channel or a spike in range. I think, honestly, what fits the best here is this little range right here. You can see it's got great rotation from top to bottom, bottom to top. Anytime you're drawing a channel or a range, just so you know, I always look for rotation. You can see the spike in channel really doesn't rotate as well. We go from the low to the high to the low, right? The low back to the high, and you can see there's enough to call that a channel, right? But you look at that range, it's quite obvious that range is definitely the big, right? The big clue on this chart. So strong move down into a trading range. Bears have control, want to be a seller. I'm looking for two basic patterns here. One is going to be, which we've already talked about a few times, one try, two try, failure, back down in, or second pattern, strong move lower, right? Strong move lower, get that moving average through, and we continue selling, right, with lower lows tomorrow. The hard part about the move lower is going to be getting that moving average nice and strong lower, right? That requires a lot of strength going lower here. So be very careful trying to sell at these lows, because trust me, if the bears saw value in lower prices, they wouldn't keep getting kicked back right now, right at the low of that range. So be very careful not to fall for those classic breakout traps that we see the low of a trading range. Get it up, one try, two try, failure, pull back down in. Easy trades as long as you know what you're looking for. On the way lower, watch out for that trap failure, back up in, make sure we can hold below that low, and then you'll have the green light to be able to keep selling down to that large measured move target at 67.92. How do we turn bullish here tomorrow? Three things, right? Strength, pull back to the moving average, and then what? Yeah, we're looking to see another strong leg higher, right? It's not enough to just have a strong move up, because that will likely fail right back down again. But if they can get a strong move through, now we're talking. Now we can drive up that high, find that low, and we can look to buy the low of this channel, buy the low of that channel, right? Easy trade as long as you wait for it, right? So don't try to mess around with that first pullback, right? It's a gamble trade at that point. I want to make sure I wait and buy that second pullback, because that's the one where everyone's on the same page. And because remember, as a professional trader, my job is to trade with everybody else. it doesn't help me being the only person who knows some secret code, right? That doesn't work in day trading. I realize that works in other businesses, right? In most other businesses, we want to be all alone in our business, right? We want to be the only one doing what we do. But the reality is, in day trading, we have to move with the momentum of the market. If you fight the momentum of the market, right, you're going to end up losing that fight. Target back up to the high. Probably that big round number, 7,000, going to be an easy target for those bulls if they can take control here tomorrow morning. Let's keep moving here. Whoa, what in the heck happened to gold today? Gold is bearish with a massive run lower this morning, which tumbled all the way to the opposite side of this pendulum swing and reached a large quadruple down target for the bears. This short-term spike and channel pattern is a big clue. Spike and channel patterns tell me to look for selling opportunities up above the high of the channel tomorrow morning. But I can't help but notice this, right? It's screaming at us. We're now below that big multi-week range we talked about all week last week, the week before that, right? You don't need to have a very strong memory to remember that we've been above that range and trading in that range for weeks now, right? And you'll notice here, right, we're below that multi-week range, and we even overshot that pendulum swing up around that 1296 level. I mean, let's be honest, right? The bears are in complete control. This is not a bull market. You can't fight this momentum yet because you're going to lose that battle, right? My plan is definitely to look for selling opportunities first, but this market can easily snap all the way back in the opposite direction and head right back to that 1310 area, right? If these bears can't keep control, right? So again, if this is the first time you're watching my newsletter, let me kind of bring you up to speed here, right? We've had this trading range / triangle here going on for weeks now, ever since the beginning, right, of the month of May, right? We have this big move going higher, right, above the range, almost just enough to rope in all the buyers, and then they dumped it right back down again, right? Well, you're wondering, okay, so how far can this thing go? Well, usually the amount of the move above the range is usually about the amount of the move below the range. And you can see, this is obviously the momentum of the market was so strong at this point. So I'm not surprised that it went through the pendulum swing because look what else it hit, the quadruple down. Anytime we see, by the way, guys, I like to use measured moves, right? Measured moves, symmetrical legs like this, right? But if there's no symmetry, right? I mean, where would you draw your measured move right here? Think about it, right? There's no pullbacks at all to use for a measured move, right? For example, when the market does this, right? When it's going up and then pulls back and then goes up, of course, right? That's a measured move. That makes major resistance easy, right? Easy stuff. But at the same time, though, if this thing just dumps like this, there's no pullbacks. There's no legs to measure. It's just blammo, right? All the way down to those lows. So how do you know kind of where is the alternative to a measured move? Well, I take these first two swings, right? That creates the first leg. Then I double them down, second leg, then third leg, and then fourth leg. Now, in my experience, most markets, and unless this first leg is really small, most markets, though, when they hit their quadruple down, they're done. They're done for the foreseeable future. Now, again, I'm not saying just because we're sitting on quadruple down support, this market's going to be tied to a string and go right back up where it came from. That's probably not going to happen. It's possible, but it's not probable, right? And as a trader, we have to think in probabilities. What is more likely right now is to see the market go up and give it a very good shot at retesting that low. If they try twice, and they can't retest that low, then we'll probably see the market return back up to retest that high. So again, strong move down, very strong, very obvious a bear market. Don't fight the momentum on this. But again, combine that with the knowledge of where we are in the big picture. We got some significant clues from the pendulum swing, even bigger clue, 1, 2, 3, 4 legs down. Even bigger clue is that 4th leg down. Okay, so we know we have some support levels down here that we need to treat with respect. So what's the plan look like for tomorrow? I'm going to look for a selling opportunity after a relatively decent pullback and then go back down to retest that low. As we pull back, though, and try to go lower, if we try once and fail, they try again and fail, right? They try again and fail. That's when we start looking, right, for that move going higher. Okay, so we'll play this on both sides. Let's talk about the sell side first. Okay, as I dig in here, talking about the sell side here first. As a seller, what you're ultimately looking for is those prior swings, right? 1300, 1298, 1295. At the very least, I want to get up and get above that 1295. What that will do is that'll bring the moving average over. That moving average, of course, is ripe for buyers to try to call that reversal. It's way too premature for that. I'll look for those buyers to fail so I can then sell into their stops and get that move going back down again. Another option here, which may be possible for tomorrow as well, keep an eye out for this, is going to be, right, a move higher that holds a trend line, goes up, tests that trend line, and then fails and back down again, right? So keep an eye on a rising support trend line. These support trend lines usually look more like this, where they'll rise up, price pulls back, hits that trend line as resistance now. The moving average, of course, is now coming over. Buyers try to buy the pullback, they fail, failure strength, strength pullback, and back down we go, right? So there are 3 scenarios, 3 patterns: a 2-legged pullback, a buyer failure, right, and a seller pullback for the move going back down, right, to retest the low. So that's going to be the scenario I'm looking for here for these bears tomorrow. Another scenario to keep in mind for tomorrow is a possible trading range. Big move down, watch for double bottoms. Once you see a double bottom here, we haven't seen it yet, right? No double bottoms yet. But if we go up and back down quick and then we see it bounce, that becomes double bottom. Double bottom, now 1 try, 2 try, failure, back in, right? It's a range. Anytime we have a range, buy low, sell high, focus on failures using that 2-try rule. Again, we talked about that earlier on in tonight's newsletter. If you're just joining us right now on that video and you want to learn all about the 2-try rule, the buyer failure patterns, trap patterns, grab that free trading class in the upper right-hand corner, right, and you'll get a much deeper dive right into those patterns here as well. Okay, now one more thing to keep in mind for tomorrow as well is, what if we keep going lower, right? What if it keeps going lower here tomorrow? Hey, for all I know, this market could be on a tear, right? Keep going lower here tomorrow. If we keep going lower tomorrow, what's the plan here? Do I abandon ship and start selling everything? No. We focus on selling those traps because it will be a spike in channel, right? So up and back down we go from there. So if we do keep pushing lower, if this market just says, hell no, I'm not pulling back, right? We're moving lower. We're going to 1200, right? 1300 was good. 1200 is coming to next. If they keep pushing this thing lower, then we know, okay, there's something bigger out there. I just don't want to go being foolish and selling low. I want to sell high. Okay, so we got a great plan there for the bears. Now, what would it look like here for the bulls? What will most likely happen is it will look like something like this. It'll go up, moving average will come over, right? The buyers will try to sell once, right? Buyers sell once? No, sellers will sell once, will go higher, right? They'll try again, and then once you see that 1, 2, and the key is going to be this: higher highs. If we get the sellers to try twice with those higher highs, and then we start seeing these buyers take it, yep, that's your cue right there, right? That's your cue right there. We're going back into that range, right? Again, stay patient for it. You don't want to go trying to call reversals. Again, you fight the momentum. You're going to lose that fight every day of the week, right? It'll knock you out of they'll knock your account down, and you'll eventually lose the battle, right? So pick the fights that you can win. Wait for those bears to try once, try twice. If they fail after that second attempt, now we're talking, right? Now we're talking. Find that new channel, right? Buy that pullback, right? And we're in like Flint going back up, right, into that range, 1310.6. Okay. Another scenario you want to keep in mind would look something like this. We go up, buyers try to buy, buyers try to buy the pullback, right? And they fail. We make a run back down to that low, but we can't quite get down to retest that low. This happens all the time. Okay, where we get a good sell off the high, but it can't quite get back down to retest that low. And what happens? Right, it pulls back off that low. Now we have a trend line, right? And that trend line, this is where you want to start looking for those buying opportunities. On the next attempt now, right? On the next attempt now to go lower, right? We see them struggle and fail, and bingo, that's where you start looking for that buy. So if we get that higher low, it's not a bull market yet. Wait for the bears to fail again. Try to buy as close to that trend line support as you can, because that's your protection, and then right back up into that range. All right, guys? So it's either going to be a 1-2 gone, right, where it's easy. It turns bullish right away. But usually, though, it's a one tries to go back down in. They can't quite get it. Rising support trend line now. They try again. They fail now a second time, once, twice, and we're gone, going back up to retest the high. Again, you've got to let these bears squeeze a little bit more out of this, right? Get a little bit more juice out of this fruit before it usually goes back up into that range. I get you covered, both bull and bear side on the gold tomorrow. Let's keep going. How about some euro? Euro is bearish with a strong move back down to last week's low, which is a big clue as we head into tomorrow's session. Now, I want to sell this market going with the trend, but I don't trust selling into this measured move and the major support level from last week's low. So my plan for tomorrow is to sell looking for buyer failures up above this little short-term trading range that we're seeing right now. I think really what you need to do, though, is in this chart is zoom all the way out and see kind of where we are here in the big picture, right? We've had this just colossal, right, move down on the euro, right? Nice thing about currencies, or really the nice thing about the euro, is that the ECB rarely makes policy decisions. You'll notice our Fed in the U.S., right, here in the U.S., the Federal Reserve Bank, they're always playing Geppetto, right? Geppetto was that Pinocchio's owner or whatever it was, Puppet Master, whatever, right? They're always pulling the strings, right? So nothing really materializes very long, right, very long term when our Fed makes decisions. But the ECB, right, when Draghi speaks, right, and they make policy decisions, they don't do it very often. It's just kind of the way they do things in Europe, right? So it leads to big long-term trends, right? And you want to make sure you follow that long-term trend. Well, as I zoom in, you can see we had this strong move down, right? We had a couple legs going higher, but now we're back down to retest that low. Now remember, when a market moves in one direction, then we pull back, two-legged pullback off that low. Where's the objective? The objective is to get back down to retest that low. We then need to time out and see what do we do from there. Do we kick back and this becomes a trading range? Or does it push through the low, and can we now continue moving to another leg lower? This will be a new channel, right? New measured move, et cetera, et cetera. So here we are now, right? Big, strong move down, two-legged pullback, retest that low, right? Just on a bigger macro scale. So this is my concern. My concern is we've got an obvious bear trend. It's obvious, right? Strong move down. We got a channel here, two-legged pullback, retest it. And do you see the pattern? Look at the pattern. Right? What an interesting pattern. We've never seen this pattern before. One try, two try, failure, strength, pull back down. No, I've never seen that before. I'm glad we pointed that out. You get the point, right? I'm having fun with you on this, but this is something we see over and over and over again, right? Literally all the time on trending days. Range days, a little bit different, right? But trending days, this is very, very common, and it's really a fundamental piece of my trading strategy. The hard part now is we got to be really careful down here, right? I've got measured move support, right? I've got prior week low support, which I just pointed out there on that longer term view, that macro view. So I got to be careful. Right? So really at this point, there are two basic ways to trade this. The first way, and the most common, is to go up and sell it back down again. Right? Usually these turn into ranges. This may not be a triangle. It looked like a triangle. Now it's trying to break down here at the opening bell in Asia. But this could end up being a range, right? Double bottom, up, sell the high, right? Back down again. Again, that's why I have the battle zone up there. The next thing would be, right? The next option will be a strong move through. How strong? Strong enough to get that moving average below that low, right? Use that as resistance now, and we can figure, right? We can look for that sell going lower. Most of the time what happens though when we get that new lower low like this is it oftentimes creates, right, like a new spike in channel, right, a new channel going like this. So you got to be careful, right? We're going to look to sell that pullback, right, what I call a fake out breakout pullback, which means a strong move down, moving average gets through, right, two-legged pullback, use that level of support now as resistance. But again, be very careful selling down here, right, because again, right, you're going to see usually those will line up, that'll line up, and then we want to go up. Failure, strength, pull back, right, and back down again, right? There's that same pattern just later on in the sequence. All right, guys? So those are pretty much the two scenarios I'm preparing for here tomorrow on the euro. Up, one try, two try, failure, strength, pull back, back down. There's a good example right there. Or down, two-legged, keep going. Look for that new channel, right? And then sell, right? Sell back above from there. All right, guys? Two try rules, failure patterns, trap patterns, breakout pullback patterns, all of these different patterns. I'm going to give you a much deeper dive. Grab that free class in the upper right-hand corner. Look for the information icon in the upper right-hand corner, right? Learn the strategy. Again, my goal tonight is to give you a couple tricks, couple tips, couple more tools for your toolbox, so you can make some great money tomorrow in whatever market you want to trade, because all of this can apply to pretty much any liquid market. Now, speaking of tomorrow, I would love to see you tomorrow in our trade room tomorrow morning, 8 o'clock Eastern time. We open up. I've got a free trial on our homepage here at School of Trade. Grab that. I'll put the link in the description of the YouTube video. We've got beginner, intermediate, and advanced classes. Our advanced course comes with everything you need. You can learn more about that on our website. And if you have any questions, you can post those questions in the comment section below the video, or hit me up on live support. I'm always standing by 24/7 to answer all your great questions. Guys, hope you had a great Tuesday. Tomorrow, another big day of learning and earning opportunities. Hope to see you guys tomorrow morning. If not, we'll do it again tomorrow night. Deal? Same time, same place tomorrow. Bring some friends next time. Bring some questions, and we'll see you guys in tomorrow night's newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.